Hello guys, welcome back. I know it's been a while since I recorded one of these videos, and yeah, it's been a while. I've been learning, I've been training, teaching myself also, and I won't lie, I reached a point where I even forgot I was doing a YouTube channel because I was so into this and learning and trying to understand the market. Like I had to go I had to go that and I had to do that. And you too should do that. You should be obsessed with the market, understanding price, where price is going, what price is going to do next, refining your skills, refining your strategy. Yes, see, you should be obsessed and obsessed and obsessed to your core, understanding, refining your skills, knowing what you want with trading, going all in with trading. It shouldn't be like a hobby where you come, look at the markets, take 2 trades, take 3 trades, then leave the markets. No, imagine the market consists of 3 billion 3 billion. Like, if I'm not wrong, I'll do the statistics and I'll correct myself. But what I know is that the market contains is it 3 billion or 3 trillion? 3 trillion, I think, that's circulating through the market every day. Then you're here, you want to make a couple of $100, then you're out. Are you dumb? Where is the money going? If it's not in your pocket, where is the money going? You have to be obsessed and knowing what you want to chase your dreams and chase the goals, chase the market, set out a target, challenge yourself, go for go for aim for 10,000 dollars. And if you refine your skill, if you refine yourself, if you refine your mindset, then you can achieve these big numbers. You enter a trade, you come out with 50,000. You enter 10 trades, you come out with $1 million. It's fucking possible. It's fucking possible. But your lifestyle in trading depends on the lot size that you're trading. You see, so you have to grow your lot size, you have to grow your currency, you have to grow yourself in the process. You need to understand certain things, certain criteria of your life, what makes you want to trade, what makes you want to wake up and chase the markets, what makes you want to chase the money in the markets. What makes you want to chase the money in the markets? Right now, I'm in my fucking office, my 9 to 5 job, and I'm here doing this YouTube video because I want to show you a small breakdown of what I have understood the previous time, and now that I've been trading, a small thing that I know. Remember, we are here learning together and growing together. And this video, I will find it. You see, Atanatu, even I'm using my phone. I will find it once I'm rich. I will find it and I will repost it. And by then I will have gained 100,000, 500,000, a million subscribers on YouTube. I will achieve it, and you'll be here to watch every part of it. So, without eating too much time, we have little time here. Let's dive in. A brief market structure. That's it. I'm teaching you about market structure, what to expect in a market, when to enter, when to come out, these things, liquidity and stuff. So let's dive in. It will be a short video. So wait. Well, you see, I'm just playing. No, I'm just playing. I'll be delete all drawings. Okay, in a market we have highs, boom, 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 bam, bam, bam. Here's the thing. What am I doing? Digital drawings. Let's start. So the basis of this is market structure, understanding it. Like the market, this is the low, the market makes a high, it doesn't break this low, then breaks the high, goes down again, respects the low, breaks the high, respects the low, breaks the high, respects the low, breaks the high until it breaks the low and respects the high again, breaks the low, respects the high, breaks the low. Like that's it. On hizi picha zinaenda wapi? Let's do it again then. High, low, high, 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 low, high, 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 low, high, 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 low, high, 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 low. Then price makes a higher high and then makes a lower low, respects the higher high and breaks the lower low, respects the higher high. Like that's the basis. Shit. Goes up, comes down, goes up again, comes down, goes up, comes down, goes up, comes down, goes up, comes down. Really, nigga? Let's go with the one that I'm used to. That's for back testing, of which we will get into. But let's first dive into here. You see now the market makes higher, it goes there, comes down back again, it respects the low, breaks the high, respects the low, breaks the high, respects the low, breaks the high, until now it doesn't break the high enough, and so it breaks the low. It doesn't respect the low, it breaks it, and now it respects this high, and now we are going the opposite direction. I will teach you that in a few minutes. Let me just put that. And so this is what we call, this is a break of structure, a break of structure, a break of structure again. Now you see price failed to break this high, and so it took out the low. This is what we call a change of character. Price has shifted bearish. Price has shifted bearish. Now the bears are in control, and now the market comes from here, and now it respects this, targeting the lowest low. Now we go again. I think you've already understood. Break of structure, and a break of structure, like there. So in trading, there's what we call higher time frame analysis. Like this, we can call it the 4-hour time frame, but the 15-minute time frame is more complicated. And a valid break of structure is the one that breaks with a body, not a wick. When price breaks with a wick, it's a liquidity sweep, and it's not a valid break of structure or a valid change of character. Like you see, this is the 4-hour time frame. Let me see if I can make a 15-minute analysis. 15-minute analysis we have here. We will change the color. We have that one, we have that one, we have that one, we have that one, have that one, we have that one. And now here price respects that and now comes down here. It goes again. Goes there, then breaks again. Like you see, it's a continuous movement until till it refuses to break again. A continuous movement. Now for the 15-minute time frame, you'll find something like this. It's the same thing, won't lie, but now it's more detailed, it's more into plan. Like as you can see, there is this high, this is the high, it respects here, then it moves to the downside, which is this pullback, then moves again. Okay, let me adjust this, then moves again and breaks the structure. Like it's the same, and I know it's complicated, like nikikuchorea hivyo utaelewa, but wacha sasa niwaonyeshe na real markets. Like let's go to this is for back testing. We reset the chart view, we go back, so we are in the 4-hour time frame, and the 4-hour time frame, as you can see the 4-hour time frame. Let's mark out the highs. You can see this is the latest pullback, so this is where we'll start. Pullback, goes again, again. This is the latest high, so I'll aim for that one. Again, then price reaches there. Like I hope you've seen that in the 4-hour chart. It's not as comprehensive and as detailed as let me go to the other one. The other one is much easier to use. It's trading view, like reset chart view. Let me first wipe out this, turn off my indicators, and now we have that. Let me put it in that one. Okay, let me put it the way you can see it. Nimeiweka hivyo, hope we can all see. So tuko kwa 15-minute time frame. We will change the time frame to like the 4-hour. Let me change the time frame first. We go to the 4-hour. I can teach you good. Now this is what I mean. In opinion, where we have seen the break of structure and everything, we see this is the latest low. The high gets taken out. This goes there. I will adjust that a little bit. Like you see, it's the same thing. Break of structure, pullback, high. Price refuses to take out this high. It respects this. Price changes character to the downside. It moves again. This fails to break. It fails to go here. Again, it respects this low. And after price respects this low, this is a new high. It changes character to the upside, then it goes up again, comes down to a respected area, moves price back again, then retraces, then goes. It's the same thing. Like now tukiweza irudisha, we return it, go now to the 15-minute time frame, and I hope you will see. go to the 15-minute time frame. Time frame. You see, same thing I told you. 15-minute time frame will be much different. You will see a lot of higher highs, higher lows, higher highs, higher lows, but in all and in the general direction, price is just doing the same thing. But in a smaller time frame, we see big things. You see like this move, this high goes to the high, it pulls back again to the low, but you see this all things, see this thing, with the candlesticks and all that. Again, as you can see, I know I'm not a good teacher, I'm just teaching myself in the process, and I will get there, to which I will give you a complete and detailed thing. Now that you have understand market structure, market, the way it goes from higher highs to higher lows, to lower highs to lower lows and everything, now we can get to the real stuff, where I like liquidity. Like let me break down again. As you saw, let me go back again. Mark, you see, here it's easy. Like it's easy here to spot the highs, the lows, the highs, the lows, the highs, the lows, the highs, the lows. But in the charts it's more complicated, as you can see. But it's not that complicated. I will teach you how as we go on. Right now I'm only giving you like the basics and everything. So you see the highs, the lows. Now under the lower time frame, as we see, price is making these things, price is making to this moves, then it drops to that area, then starts moving up, then starts moving up, then starts moving down, moving up, and down. In the smaller time frame it looks something like that. Let me adjust these things a little bit. In the lower time frame it looks something like this, the 15-minute time frame, the 4-hour. Let me look if we can see for that pencil stuff. You see, price is there. Price makes these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, lower low, lower high, lower low. Let's change this thing to like white. Under the lower time frame we see price making the same thing, higher low, higher high, lower high, higher high, lower high, higher high, until it makes a lower low. Same thing, same movement, just different time frames. And now we use this one for a general direction. Now when I exit drawing mode, I put this. We can see that, right? Higher highs, higher lows. Now for the 15-minute time frame, I want you to understand something. When price goes like this, it accumulates what we call liquidity. Liquidities can be buy side or sell side. You see now this sell side liquidity, like advanced sheet, like you see, this is called liquidity. These are stop losses, stop losses, stop losses, stop losses. Because more people are buying the market. Now this is where they put their stop loss. And I know you're in forex, so you understand like the basics, like stop loss, take profits, and all that. These are the stop losses. The stop losses, the stop losses. Now you see when the market comes from a 4-hour pull for a 4-hour to making a 4-hour high, price in the 15 minutes makes a complete, creates sell side liquidity. Now when price reaches the pinnacle of the 4-hour time frame, like creates the 4-hour time frame, and now it's time to pull back. The pullback is usually a collection of all these stop losses and sell side liquidity, because more people think the market is bullish on the 15-minute time frame, because it makes higher highs, higher highs every time. But on the 4-hour, as we can zoom, we see on the 4-hour it's making a complete higher high like this one, and now when it reaches here, it pulls back. And to the 15-minute time frame, this is what it does. It changes character, then it pulls back to an area of interest, then goes back, collecting this liquidity. Hope you understood that. So drop the comment in the comment section if you didn't understand which part and how you would like I will elaborate more. Like same thing, price collects liquidity, price comes down, creates this. Let me make this a pull back there. Let me make this one over there. You see now, like that pull back, this is the respected zone. Liquidity, same with this side. Price collects what we call buy side liquidity. Like any price operates with liquidity and trend line. Liquidity again, you see price is making liquidity, it's just collecting liquidity in certain areas and certain points. Okay, let's apply this to the charts now. Hope you've understood that. Let's now go to the chart. Okay, we'll take this, let me look for place. Here, let's go with this one. Price accumulates, let me just show you that part. Price, this is the low. Price accumulates liquidity in the 4-hour chart. You see, that's liquidity in the 4-hour chart. We know now the market in the 4-hour it's bullish, because we see lower low, we see a break of structure, we see a break of structure, again, we see a break of structure. Then at this point something happens. Price does not break structure. This is the lowest low, this is the lowest low. It does not break structure, it changes character, because it closes with a body towards the downside. And as you can see, price did not change character. Here, this is the highest high the market made. So now this high will be respected. The price breaks structure, respects the high, and now again changes character towards the downside. And let me zoom out. You can see price did exactly what it was intended to do. Took out the liquidity. As you can see, price, as I said, did not close below this low with a body. It's only a wick, so the wick is the liquidation. It took all this sell side liquidity and went down. So we go back to the chart. This is the 4-hour time frame. Now let me take you to the 15-minute time frame. You see what I'm talking about. Hey, what's wrong now with this one? Look for that area. Here we go again, as I was telling you. You see right now what the market was doing. Price started off here 20 trend, accumulating liquidity, all this. Now you see in the 15-minute time frame, the price is like more detailed and it's down. You don't see big things. You see in the lower time frame, we see so many things happening. We see like here, we see a break of structure there. We can spot even changes of character. In these zones. Price goes, breaks the high, comes again, respects the high. Like in the 15-minute chart, it's like the 4-hour, like broken down to small like key details, and it has a market of its own. You see, comes back again, respects the 4-hour pullback, which is this one, then breaks structure again to the downside. You see, respects, comes back after accumulating liquidity. It comes back to the latest pullback for our key zone, which I shall show you that later. For our key zone, it goes, accumulates liquidity again, breaks structure, creates the new market high, breaks structure to the 4-hour, but to the 15 minutes, this is a change of character. And this is where people like make 15 RR, or you see people make 6 a 1:6 risk reward ratio, because they have understood 4-hour time frame with 15-minute entries. Like that's depending on your strategy. I'll dive into my strategy later. This was just like a brief breakdown of market structure, how market structure and liquidity functions. And if you found this video enjoying, hit the subscribe button. Let me know in the comment section if you want to know my strategy, of which I will show you either way, and how you can use multiple strategies with only market structure, and how you can make money with market structure. See you in the next video.